Hey everybody, welcome to Stock Trading Pro. My name is Pete Renzulli. We got a bunch of stuff to talk about today. In today's video, we're going to break down the Fed, the impact on the Fed this week. Are they overreacting a little bit? Will they do nothing? Will they surprise everybody and do nothing? I don't think so. However, there is massive volatility that happened last week leading into this week. Should you be actively trading today? We're actually going to break down our daily newsletter, the Daily Ticker. We're actually going to give you a copy of that. You can click below in the description and download a copy. I'm going to show you how to do that in a second. I'm out of breath. I just ran down the stairs. I'm also going to talk about this book, something that I want to recommend. It's not actually a trading book, but it's a book about the New York Stock Exchange. It's actually a fascinating read, and I'd like to share that with you. I just finished it this weekend. But more importantly, the big theme that we're going to cover in today's video is whether or not you should be accepting bigger risk this week with the kind of week that we're about to expect. We have the FOMC announcement. We have the implosion in financial stocks. We have the implosion in energy stocks as well. There's really just been one pocket of opportunity, which has mostly been technology, and diving a little bit deeper has been semiconductor stocks that has kind of lifted the entire market on its back. And I want to give you a little bit of a deeper dive into the metrics that we do overnight. So we have a ton of stuff to discuss today. If you have anything you'd like to discuss, pop it either in the description, the comments below the video. If you happen to be on this with me live, pop that into the chat there as well. Man, we got a lot to talk about. I'll be right back. Okay, so where do we start? Let's actually start with the book. I'm really excited about this book. Obviously, if you watch CNBC, you know who this guy is, Bob Pisani. Shut up and keep talking. It's an interesting title for the quality of the book. The book is absolutely amazing, and the reason I'm bringing up the book is because he gives a lot of behind-the-scenes type stuff of kind of the history of the stock market, right from just prior to the dot-com boom all the way up to recent price action and how things are unfolding right now. So I actually was one of my offices was actually downtown in New York. So we were kind of like right around the block from the floor of the exchange. If you're fascinated by what actually happens on the New York Stock Exchange, and more importantly, how things have evolved when the internet started to explode a little bit. And just to give you some context, if you happen to not have been an active trader, let's say late 90s and into that time period, it was $200 just to place one trade to get your broker on the phone. This actually walks through a part of it on how things went electronic and what actually happened on the floor of the New York Stock Exchange at that moment as well. And everybody was fighting it. And it all started with an ECN, an electronic communication network called the Island ECN that eventually became Daytech, that had the Watcher software, which a lot of us, including myself back then, early in the day trading days of the internet, that was the only software you used. And it was actually pretty good. So this book, Shut Up and Keep Talking by Bob Pisani, absolutely worth it. I think it's like probably 400 pages, but you'll buzz through it. It's actually interesting, very fast chapters and worth it. First thing I want to make sure you do is you download today's edition of the Daily Ticker. So I'm actually going to show you how to do that. Once you click down below into the description, what you want to do is you want to go up here into the top corner over here, and you want to go File, and you can either download a copy, save it as a PDF, or you can make a copy for yourself. This way you'll be able to follow everything that's going on in everything we talk about today. So I actually want to start out. I want to start out with really setting the tone, because obviously the big story of the week is this, right? The big FOMC meeting that's coming out this week, and how this meeting should be affecting your thought process. So if we kind of jump back into last week, setting the tone for what we're going to be looking at this week, I start out the newsletter. I'm going to start with the newsletter, and then I'm going to go to the charts, and we're going to kind of bring this all home into what kind of risk is appropriate for this week. That's actually the big thing. That's actually really important. So I want to start out with the top of the newsletter, and I want to break it down. Okay, first we obviously have a lot of news hanging out this week, and we've got four different points of view on the Fed announcement. I always think it's good to get more than one opinion. If you've never watched this guy's video over here, Clear Value Tax on YouTube, he's really, really good. You want to click on that video as well. And then we have earnings breakdowns for the week, right? Most of the earnings are out of the way. But this is the point that I want to get across to right here. Sometimes you go bigger, right? You build positions with the intention of holding longer and grabbing that white whale. One or two good trades that you hold for months could make your entire year, right? So obviously, what I'm talking about are the way the tech stocks have been trading recently, specifically AMD, which just launched into the stratosphere over the last week and a half. NVIDIA has absolutely been on fire. And what's kind of interesting is if I ask you right now, out of all the tech stocks, what tech stock had the biggest move that you would not have expected last week? Microsoft. I can't believe the size of the move that Microsoft had last week. It was just absolutely amazing. Really, really simple, clean breakout. Just amazing. We also had a big move last week out of an OG stock, probably, I would say back when I started trading, which actually now is in April, about a month from now. April 17th will be 23 full years that I've been trading full time. Intel and Cisco were the two biggest stocks. And I don't know if you actually happen to see what Intel did last week and how this is all playing into what we're watching. Intel was just amazing, amazing last week. A little bit of profit taking, but actually catching a bid again, right? So what does all this have to do with? We're going to keep building an argument. Everything we're doing right now is building an argument for what kind of risk we should be expecting to take heading into this week. So we actually kind of got all the way down to the end of the newsletter on this particular section where I said 5 days from now, you'll thank me because we're thinking things through right now. Because remember, there's a lot of different types of opportunity. So there was amazing opportunity in technology. Then we have the opposite side of the market where we have obviously the financial stocks just absolutely imploding. We had a couple of people last week thinking about bottom fishing these things. Hopefully you did not do that. Even Goldman Sachs was actually breaking down before all this happened, right? Then you have energy stocks also imploding. So we have tech stocks exploding to the upside, way beyond the optimal entry. We're going to talk about that in a second. Energy stocks coming down, financial stocks coming down, basic material stocks coming down, and probably the number one stock that actually carried the entire market for a while, GE, while it's still bullish up here, is showing signs of distribution. And I want to talk about that because the industrial stocks, if we get over to the XLI industrial group carried the entire market, especially the Dow at the end of last year. You can see that they really haven't done anything since 2023 started. As a matter of fact, we actually have Caterpillar, 3M, Honeywell, a few of them also breaking down in a big way. So the one sector that carried the market higher kind of pushing out of the way. So what does this have to do with this week? What does this have to do with the fact that why I said on Friday, we'll be very glad that we had this conversation today? And look, I don't know if you're trading full-time. I don't know if you have the dreams of quitting your job and trading full-time. What we're going to discuss today and map out is exactly what I do every single day for our community, but more specifically for myself, because I'm actively trading as well, is what is the expectation for follow-through? Now, we call that building an argument. We call that putting as many pieces into the decision for whether or not we should choose to accept risk because we believe the odds of hitting our target, our profit target, are better than pulling back and hitting our stop loss. So that's what you have to do with the trade. So I'm going to break this down for you right now. And I think you might be a little bit surprised. We're going to talk about taking a little bit less risk this week simply because of this perfect storm of the Fed, the FOMC, Jerome Powell, financial stocks, energy stocks. That's a big thing right now. Throw on top of that the tech stocks, which exploded, are too far from the optimal entry for a new swing trade. So let's think about this. The optimal entry is if at that moment that you are about to buy, how much profit potential is likely based on what the stock normally does. Now, a lot of those technology stocks exploded. I think AMD, if I'm not mistaken, we can actually take a look at that together right now. I think AMD was up close to 20% just last week. If we take it from where it opened over here and where it peaked out, 21.6% last week. So they are a little bit beyond the best new swing trade. So let's start to build this argument. The stocks that were the strongest for new swing trades are too far to justify new full size risk. So you want to stay away from that. Maybe day trade it, maybe one more day of bullish price action, right? Then you have the bearish side in some really big sectors. Like we said, financials. We had Financials imploding. That story's not done, out of the way. Credit Suisse, that whole deal with UBS was actually done this weekend, right? Now we also have the Fed. Now, here's the big thing. All of that is not as important as much as you know that's what's happening right now and how you plan to trade it. So I'm going to break this down for you right now, step by step. Then we're going to get into individual sectors. We're going to break down industry groups all the way down to the first swing trade that I'm looking at for today on Monday as the week unfolds with that bearish tone in the market. Okay. So let's hop on into the charts and let's start out with the SPY, because that's going to be the big part of what we're going to look at. We're going to actually break this out, and I specifically have this mapped out just like this. Okay. First, let's start out with sector rotation. So if we hop into sector rotation and we take a look at the last 4 weeks, okay, this is about as bullish as we had over here, other than the way communication services, which was Meta, actually having a nice explosion, and technology. But over the big picture, the last 4 weeks have been a little bit of a mess. We bring back Friday, options expiration, more a little bit of a mess, right? Now let's tackle that and build that into the picture, all right? 1 or 2 good trades they hold on for months could make your entire year, right? That's sometimes when you go bigger, when you got the perfect storm, everything lining up perfectly, right? Everything lines up and winning trades just fly off your fingertips. You had to work hard to mess up that amazing opportunity. And that was pretty much every day in 2021. Welcome to 2023. You know, I might as well make that red, right? Let's make that bold. Let's make that red. Let's really drive this point home, right? Today, well, we're pretty much in a 5-month trading range and 11 months of back and forth. So this is the part that we're talking about right here. So I'm going to finish this sentence, and I want to come back here and I want to talk to you specifically. Tough in the big picture, but our saving grace is our ability to track and trade sector rotation. The order flow out of one sector and into the next happens quickly, and it was obvious if you knew what you were looking for. So we're actually going to break down that over here. We take a look at options, sector rotation, and the swing alert for today. So what is the point? Like, why am I starting out with all of the tsunami of stuff that's going on heading into this week, March 20th, right? Why am I talking about that? Well, we've discussed how easy to read and, quite frankly, how easy to trade those technology stocks have been so far in 2023. And by the way, we're also going to dive into Bitcoin in just 1 second. And by the way, I don't know if Todd James happens to be on the call. Todd James had a really nice entry in Coin, COIN, last week, and he's actually getting another nice bullish gap in his favor this week. So Todd, I don't know if you're watching, but you've been working really hard. I just wanted to comment on your participation inside of the community and how it's translating into really, really good ideas. So what does this mean? What does this mean as far as setting up this week? And this whole thing is really coming to one big audacious point, right? You don't always need to take big risk. Sometimes the deal is simply great and you can't help but be profitable in it. Sometimes the deal is, man, there's a lot going on right now, and you have to be really, really smart about, if you're going to put your money in harm's way, how you're doing that. So for me personally, what that means right now is that I'm going to most likely be lowering my initial position size this week, and I won't have bigger positions and probably fewer positions, quite honestly, because of the amount of chaos that's unfolding in the market at the same time right now. Now, if tech stocks were kind of resetting, if we go back a week, we say they rocketed up, pulled back, and they're giving us a beautiful entry, we're probably getting a little bit more aggressive in them like we were last week. That's not the case right now. So going into this week, I am planning to be very stock specific, industry group specific, and I'm going to show you what that means in just a second. Again, you could download this, click down into the description and download this. But the main point that I want to get across to you here, though, which is really, really important, is that if you want to level up and get to the point where, how do I want to word this, where you expect to make money. If you want to get to the point where you expect to make money, it means that you need to learn how to read the market conditions. And like I said, a lot of people right now are saying sector rotation's happening fast. And I kind of agree with that. We're pretty much going from like every other week, a different sector is kind of taking the wheel. Here's the thing, though. That can't be an excuse for you. You have to have some sort of structure that tells you, again, like I show our community every day, what's going on in sector rotation, what's going on from the last week, what's going on for the last month, what's going on for the last day, and how does that translate into how you should be trading. So that's the whole point that I want to get across here. All of this stuff that's going on in stocks and across the stock market right now is creating a different environment for accepting risk. It's really important for you to understand that. Every deal is not the same. Every opportunity is different, and it's your job, my responsibility, all of ours who have trading accounts, to act like we're a hedge fund manager and say, what kind of risk is the proper risk based on the likelihood of profit potential? And we call that order flow. Order flow is going in and out of sectors, and we're just basically following the flow of money in and out of sectors, right? And by the way, if you want to trade together, our next boot camp actually starts today on Monday. If you want to learn about that and trade with me for the next 14 days and get my entire program, click the link below the video if you're interested and you want my help. So let's continue to break down. Let's get into the newsletter and how this is actually setting up the week. Okay. That brings us to today, and specifically this week, a moment to manage your capital, a moment to think long-term and big picture, a moment to plan to be smart with your trading account. So now, if you're watching this on replay, that's of course fine. But right now we're doing this. We're talking about this, over 2 hours, 3 hours before the market is going to open, 2.5 hours before the market opens, right? Before the week even starts. We're already planning based on all of this stuff that's going on, that it's going to be a different week. And that's really going to need to make us to really think through, how am I going to manage my capital? And more importantly, think long term. So in other words, you don't have to push it this week. We got so much more opportunity, so much more left in the month and the year. You don't need to force it if it's not there. So I want to give you a quote. One of the first quotes that I ever heard way back in the day. Joe Blazey was the mentor actually at that time. He said, if it's hard to find, it's not there. So if you are struggling to find opportunity this week, keep your risk in your pocket. There's no other way to put it. Think long term. So let's keep breaking that down and exactly what that means for me this week. Okay. With the recent implosions in the financials and energy, the bearish volatility remains fast and furious. So that's the bearish side. Throw in the rapid, unexpected bullish tech sector, and you had the perfect scenario to feel like you knew nothing about trading, right? It was easy to feel confused. All right. That's the whole thing that's going on right now. So that brings us up to this week and the FOMC announcement on interest rates. As of this moment, it looks like 25 basis points is on the table. Is the Fed overreacting to short-term news, or are they done with the bigger hikes? Now let's talk about that for a second. Have they tamed inflation? Is inflation coming down? No, not even close to what they would expect. The jobs market is remaining hotter than they would like. And this 25 basis points is kind of what's on the table right now. But what if they're overreacting to what's going on right now and they decide to do nothing? They decide to do nothing. And then the language says, but we're going to start again next. We're just waiting for this financial thing to get out of the way. What if that happens? So now let's move our way over to Wednesday afternoon into, let's say, Wednesday, Thursday, and Friday. Make a plan for that. If they surprise by doing nothing, the volatility is going to be amazing. So you want to kind of save your capital, save your P&L for the week, kind of chicken scratch back and forth. We might call that cash flow mode up until that announcement happens. Now, there's two pieces to the announcement in the FOMC on Wednesday. The first part is the actual announcement about what they're doing. Are they raising, and by how much? It's widely expected right now for it to be 25 basis points. However, after that, then they give the language about a half an hour, and a whole new discovery happens, and price action ends up unfolding based on the reasons they did what they did, and how that plays into what they plan to do next. This is a lot, right? If this sounds like so much stuff that's going on, you're right, and that's kind of the whole point that I want to get across. I want to implore, and I actually want to just make sure I say this, right? Everything we talk about here is for financial education, right? It's up to you to make that final decision. I'm hoping that I'm helping you make better decisions, but that's the whole point that I want to get across here. With all of the stuff that's going on, and kind of no matter what you end up reading, and all of the stuff, whether it's IBD and all the stuff that's going on in the Wall Street Journal, where they're talking about causing a panic, and is it too risky that the Fed's even doing anything? I'm telling you what I'm trying to get across to you, which is the same thing that I talk about in our stock trading pro community, same thing that I talked about when I had my trading floor in New York City. Sometimes You have to step back and say, this is chaos, and be a lot more stock specific, because the whole bunch of the market right now is not on the same page. Just kind of fighting this way and fighting this way, like a tug of war where everybody's pulling in a different direction. That's not the optimal scenario for accepting bigger risks. So I'm kind of like really hopefully coaching you right now to really think through what kind of risk is appropriate with all of these things going on. Now, that doesn't mean there's not opportunity. We're going to show you right now. And again, you can download this. There's a lot of different ideas as we now work our way through sector rotation. Okay. And ultimately down to industry groups. Okay. Good morning, Robert. How's it going? Good morning. Nice to see you here today. All right. So what will the Fed do? Tough call, right? With all the differing opinions. We showed you 4 of them just at the top. I'm sure there's a lot more. So we know that going into the week, before the week starts, we know it's up for debate, a lot of debate. If you're ready to level up the trading, you need to know that and plan for it. With tech stocks well beyond optimal entry and the 3 major stories unfolding this week, we're staring down the barrel of a likely choppy week. That's not my opinion. That's based on experience, and that's based on all these things happening right now. Think about it. If you were a hedge fund manager, would you be committing big capital this week with so much indecision? Think about that. I'm actually going to highlight that right now like that. I'm just going to put that in yellow so that stands out so everybody can really think about that. Well, guess what? You are a hedge fund manager. You're in charge of trading your account. You're in charge of putting your money in harm's way, in charge of choosing to accept risk and how you plan to accept risk. Now is the time to think like a pro. Decide what you need to see before you commit. 5 days from now, you'll be glad you did. Now, this is the thing right here. I'm going to make that bold. If you want to level up your commitment to success as a trader, the simplest and most impactful thing you can do right now is ask yourself, what do I need to see to accept risk? And you want to level that up even more. How many things do I need to see? Are you just trading technology stocks and you're just going to focus on the Dow? Are you shorting the energy stocks and focusing on crude oil? How many different things are you putting into the argument? What about all the other economic data that's coming out this week, right? All of that stuff. How many of those things do you need to see before you decide to take risk, before you decide to put your money out in the market because you expect follow through? Think about that now. And again, we were actually just having a conversation. Ralph actually was saying before about, we posted something yesterday about emotions in trading and how that affects, right? Think about this. The more you are ahead of the decision by saying, I need to see this, this, and this before I even look for an entry. And if I don't see that, I'm fine. I'm just going to make another cup of coffee and I'm going to preserve my capital until things get better. Okay. All right. So let's break this down just a little bit more. I want to get into the rest of the newsletter. So now we got a breakdown on options, and even John is breaking this down, unknowns and known unknowns, right? We got so much stuff going on, breaking this down a little bit more, talking about the banking sector. Is it dramatic? Is it still not done? Nobody knows yet, right? Let's actually kind of break this down even more. So John's breaking down more in the sectors and financial sector specifically and how that's setting up an options trade. What I want to do for you right now is I want to break down some sector rotation and setups. Now, what's interesting is we actually have one of the big dogs, probably the biggest dog out there right now, Apple, resting right at a breakout level. So I want to get into some stock-specific ideas. It's actually only down a nickel right now, but you can see this 155 level is still pretty solid. And if we kind of bring this over, this is really the place where there's the next level. So we're looking at almost $20 in Apple if it can catch a bid up near this level. I think conservatively 20 if it can catch a bid. So does that mean that I'm just jumping into Apple today? No, it's holding the bid. It's in the right sector and it's right at a level where the risk versus the potential reward, if the stock finally follows through 155, the risk is worth the reward. So now we're leveling up and now we're going beyond just what the market's doing. Now we're setting up trades that if we accept the risk, is the reward worth it in spite of all the stuff that's going on in the market right now? So again, you can go through this. You can download yourself a copy of this. You can go step by step, stock by stock, group by group, and follow along as the week unfolds. Okay, so Apple's obviously at the top of that list, right? Well, Amazon and Google had nice weeks. It was Microsoft that shined the most last week. We just talked about Microsoft, right? The bank implosion has not stopped despite the USB deal with Credit Suisse. If you tried to bottom fish last week, you had a rough night's sleep. This is not your normal decline. Let's be clear about this. This is a regulatory mess right now that is not solved. I want to be clear because a lot of people were emailing last week and reaching out on social media, both here and on Twitter, and saying they got a big haircut. They got a 50%. Look how far down Schwab fell and all these other stocks. This is not a normal decline. This is a big problem. There's a run on whether or not they had the liquidity to give people their money back. This is not they had a bad quarter and the stock pulled back too far. This is a much bigger story. Really think about how you want to accept risk if you're choosing to accept risk in the financials right now. Okay. So consumer defensive stocks stop going down. It's a little bit different take on that right now. They're not necessarily monster bullish, although monster is a breakout that we're looking at right here. They've stopped going down. So some of the ones I'm keeping an eye on right now, Pepsi, Walmart, and Monster. Also PG above 140. So if we break that down as well and take a look at PG right here. So you got 140 up to 156. So what should be obvious right now about the ideas that I'm calling out? I'm not really looking right now at pullbacks because I'm expecting the market to pull back, continue pulling back, and be a little bit choppy. The trades that I'm looking for myself personally for this week, I'm looking at stocks that have what we call relative strength, or they're holding the bid. They're at obvious levels, and we might call them the optimal entry as well, and they have profit potential. So you see, going back to what I just said about 5 minutes ago, how many different pieces to the argument to put on that trade can you add? If you're struggling sometimes and you feel like every trade you take goes against you, you're probably only maybe putting one piece in. Maybe you found it on a scan. Maybe you saw it on Reddit or whatever it happens to be. That's not enough to level up and really think like somebody who expects to make money. Think of as many reasons, technical, fundamental, news, all of them combined, price action, volume, as many of those pieces you can put into the trade. The weaker your argument, the lower your conviction should be. The stronger your argument, because you have more pieces into that trade, the more your conviction, the more your position size, the more you've earned that conviction because you just did a little bit extra work. And who knows, maybe even hang on to that trade a little bit longer. Okay. So we're going to keep on working our way down here into some of the ideas. So PG actually right at a breakout level, 154-ish actually is the next level. So let's keep on, and obviously Monster, right? Now I want to talk about GE, and I want to talk about this right here. So other than GE, the industrials have lost their bullish mojo, and even that stock appears to be distribution on the tape. So I want to give you the definition, and I want to walk on over to what it means. A distribution on the tape is a potential bearish reversal pattern showing heavy volume churning after an advance. So think about this again. We're talking about this. There's like 3 or 4 different things going into that argument of what distribution means. So in case you don't know, order flow, and specifically tracking the order flow, only has 4 different pieces of price action. If you could imagine a stock going down and then going sideways. So you got this big push to the downside and it goes sideways. If it goes sideways on heavy volume, that's called accumulation. That's when the smart money's kind of stepping in, still going down, and they're buying stock as quietly as possible, but the volume is increasing. As that volume starts to increase, because the selling dries up, we start what's called the markup. So you got accumulation, a markup, distribution, and then a move down. So GE now has gone up. We had some news about a week and a half ago, and now the volume and the indecision is increasing in GE up at these levels. So it's looking like potential distribution. Now, does that mean to short sell? No. What it does mean is to start moving up your trailing stop loss because the tape or the order flow has changed. So we'll take a look and show you exactly what that looks like on the chart of GE. So you can see the kind of move that GE has had, but now we're looking at this mess over here. If we kind of drop in volume, and you can see how heavy the volume has now gotten during this period of time while it's kind of going sideways and actually at the top of this move. That's what's known as distribution. Okay. So let's actually talk about this. Let's talk about what holding the bid means. So If you could imagine, looks like your name is Pam. That's actually my sister's name. If you push up and go sideways versus push up and pull back. So a normal price action is you push up and you pull back. You're like, okay, that's cool. I can still buy that because it's still strong and a natural pullback. But if you could think about it, when a stock pushes up and goes sideways and does not pull back, that means that there's still stronger buying under there where the bid is still there. So bids are advertisements to buy. It's somebody saying, I want to buy at this price and I need as many shares as possible. So I'm going to stay there and it's not going to pull back. So they kind of appear the same way. You push up and pull back, push up and go sideways. So push up and go sideways is very, very healthy price action because they did not allow the stock to pull back, which shows inherent demand. So that's a good question, Pam. Appreciate that. Hey, Daryl. Good morning, Daryl. And hey, Matt, how's it going? Nice to see you here today. So let's continue on into some of the ideas in sector rotation. Okay, so that's what we're looking at in GE. So Caterpillar shows 2 solid weeks of selling. So again, now we're building a case for the fact that the industrial stocks are no longer as strong as they were. Aside from the financials, energy probably had the toughest week and the most bearish week. So we just went from bullish technology to bearish on the energy as well as industrials, right? Now we're going to work our way into industry groups. So we're kind of going up even further up the list of stocks, which we call the power pyramid. We're working our way all the way up here. So we talked about the market, we worked our way through sectors, and now we're working our way up into industry groups and eventually into stock specific. So industry groups, right? Now we're looking at medical devices, giving us some opportunities. We actually have 3 of them in here that you can take a look at right now: EW, SYK, and Boston Scientific. So if we take a look at BSX, right at the breakout level, you can see that BSX, if we kind of zoom this all the way out, BSX is now at all-time highs. So again, you're starting to see stocks that are holding the bid, and this one's holding the bid at or near all-time highs. And again, you're starting to see a pattern here. I'm only looking for ideas that have consolidated, they're not beyond the optimal entry, and they have room to go. Okay, so working our way down even further, software applications had the biggest list of bullish potential trades. CRM is one that we called out about a week and a half ago. Shopify is resting at another breakout level, and WDAY on the breakout as well. So we can take a look at that one unfolding as well. So again, we're right at that level where if it takes out this 192-ish level, you can see the room to go. Look at that profit potential if it can take it out. Maybe there's a little bit of minor resistance here, but we're looking all the way up at 240 and change. Okay. Continuing to work our way through the industry group. We'd be not doing our job if we didn't talk about the semiconductor industry group. The challenge here now in semiconductors is they are well beyond the optimal entry, and they're not really good new swing trades right now. You can even see Intel, which rocketed higher and paused right at this resistance level. You can see NVIDIA, which had a really nice breakout. It's beyond the optimal entry. That's now $35 after the move started, so a little bit late. And of course, AMD, the same exact thing, where it's still an obvious buying opportunity, but I'm just waiting for it to pause, maybe even for a day or two before I initiate. So I just want that risk to kind of reset on the move before it starts to head up. All right. So now, obviously, interest rates. Interestingly, the residential construction list of stocks, industry group, also showing relative strength. All of them are above key moving averages, and these 4 stocks are 4 that you can take a look at. Want to take a look and put those into a separate watch list. On the bearish side of things, so you see how we're kind of like making stuff on both sides of the market. The steel stocks are pulling back. Now, something interesting that I want to talk about here is whether or not you believe the market's bullish or bearish, which again, it's kind of going back and forth right now. We're talking and setting up trades on both sides of the market, bullish stocks and bearish stocks. Now, if you really want to level up your game, you're going to find the strongest bullish stocks near an optimal entry to buy. And if you understand short selling, you can then hedge those opportunities that you're buying with stocks that show relative weakness. So Pam asked the question before, we talked about holding the bid. Weak stocks, while the market's rallying, are holding the offer. So they're offering it down and not allowing it to rally. So in this case, again, if you really want to level up, you'd be buying strong stocks and hedging against those opportunities by short selling weak stocks. It's kind of an advanced topic, but it's something to really think about. Maybe Google it, that kind of thing. We actually have a video on hedging on our channel as well. So if we finish up here and dive a little bit deeper into swings, to start the week out, you can see this big bearish move in Disney from earnings over here. You can see the pause over here, and we're looking for it to push down into the 84 area. If Disney opens higher and pushes higher, you'll be able to see the entire trade from start to finish, my thought process. If it opens and pushes down, I have my entry and my stop loss and my initial profit target. If it opens higher and goes higher, there's no trade. I get into all of my swings using a stop order, a buy stop order above the market, or a sell stop order below the market. I have the order flow, I have the tape reading, and then I want to get a push in my direction. I just don't put it on just because I want to be a buyer or a short seller. I want it to be moving in my direction before I actually put the trade on. So again, I just want to show you how to do this one more time in case you did not see this at the beginning of the video. Below this video in the description, you can actually download your copy of this. So I just want to show you actually how to do that. So you're going to go over here to File, and you can either make yourself a copy or you can click over here, Download, and you can either download it as a PDF or as a Word document. So when you click on that, you'll be able to see everything. And obviously at the top, we got all the earnings and everything for the week. We have a big breakdown on options this week. Obviously, the Fed, and like I said, the boot camp actually starts this week. So if you want to join me and trade for the next 14 days and get all of this stuff, including the research and everything and my picks, day trading and swing trading, just let me know. You can go down into the description and in the newsletter. And if you're interested in learning more about working together, cool, right? I'd love to see you. I'd love to have you on the other side. So thank you so much for joining me. I really appreciate it. This is going to be a fascinating week. Please do yourself a favor. Read that first part of the newsletter where we talk about the kinds of environment and what kind of risk is appropriate with all that stuff we got going on this week. It might be just the smarter move to be really conscious of whether it's the right time or not to size up. All right. Cash flow mode. That's what I'm going to be talking about a lot this week. All right. Have a great day, everybody. Thank you so much for joining me. If you have any follow-up questions, please be sure to leave those in the comment below. If we did a good job today, do me a favor, give us a thumbs up and make sure you subscribe. Take care now, everybody.